We got the study session in an hour, so.
Should be a quick meeting today.
FNH.
Just saying that it's the Dodger game, okay?
I think it's until 5, right? Oh, we will miss it.
I know, I'm sorry. We'll have it tomorrow.
Okay, let's do this. Let's call to order the Desert Healthcare Foundation Finance, Legal, Administrative, and Real Estate Committee meeting on October 14th, 2025 at 3 p.m.
Let's do the district first.
District, sorry.
18 p.m.
Oh, I said foundation, sorry. The district meeting at 3 p.m. starting now at 3:13. So the call of order. Can I get approval of the agenda?
So moved.
Second,
Thank you. On to the meeting minutes from last week. If there's any questions, we'll take them now. Otherwise, I'll ask for a motion to approve those minutes.
so moved.
Approved.
Great. At this time, public comments from the audience.
Second.
Second, yeah, you second. From the audience may be made on items not listed on the agenda that are of public interest and within the subject matter jurisdiction of the district. Committee has a policy of limiting speakers to not more than 3 minutes. Committee cannot take action on items not listed on the agenda. Public input may be offered on an agenda item when it comes up for discussion and or action. Are there any public comments at this time?
No public comments.
Great. Chris, I'll move over to you for your report.
Thank you. Couple of items, just verbal, to make the committee aware that, we have the holiday season coming up in December. Just wanted to point out that, Andrea sent out a meeting invite to hold on your calendar. I believe it was December 12th for holiday party. And we will be then, would like to actually present an action item on the October board meeting to approve up to $6,500 for the holiday party for this year in December. And so just to inform the committee about that, felt we'd be okay to bring that as I apologize, I didn't get it on the agenda because I was thinking about it over the weekend, but the year's moving so rapidly, just wanted to communicate that. The other item also too is how we've traditionally done the past few years, the week between Christmas and New Year's, that we would be closing the office during that time. So we will have that as an agenda item at the October board meeting as well. So we normally do that in November, but I'm going to be remote for the November board meeting. I should have access, but would like to go ahead and get those two items discussed on the October board meeting agenda.
Okay.
Was there a gift card controversy last year around the holidays?
We're not doing that. We didn't do it last year. We presented it last year.
Okay.
But it was.
It was declined.
It was a decline, yes.
And was there also an issue with alcohol that we need to discuss at the party?
The Christmas party?
Not for the holiday party.
Not for the holiday party, okay.
Yeah, it's part of dinner, and as long as it's approved by the board for the holiday party to include that, it's acceptable.
Okay, thank you.
Mr. Chair. Chris, the dollar amount that you're gonna be recommending for this year, is that comparable to last year's, or is it an increase due to additional people?
Yeah, so last year we had it at 5,000. I think we only spent maybe 3,000. But with inflation, with potentially added people, we wanted to increase that limit. I don't see us getting to that limit, but
I do.
Andrea's very mindful of.
Inflation is just horrific.
Yeah, I mean, and dinner prices, restaurant prices are.
It's going to skyrocket.
So my follow-up question is, I agree that it is necessary to increase it if the cost of providing the service is higher because of cost and because of additional people. I do want you to consider that the restaurant is comparable to the restaurant that we have had in prior years. I think it's been very reasonable.
Mhm.
So just keep that in mind if it's comparable, but of course, there's gonna be additional costs and for different people, or for additional people, but just not that we start.
Yeah, we won't be outlandish.
Okay, that's it.
it'll all
Thank
be,
you. That's my only comment.
Very
Agreed.
mindful of that. So that's all I have for CTO report. Thank you.
Steve, Eric?
So real brief on the CAO report, starting on page 15. Same thing that we've been reporting the last many months, 100% occupied. And the total annual rent is now estimated at $1,612,947, including all the common area maintenance fees. And no leasing activity due to the 100% occupancy.
Questions on that? Audit reports. So we're gonna turn it over to, I don't know if you want to make an introduction, Eric, and then.
Yeah. So what we
Terry.
We have Terry Robertson from Monsley Hartsheim with us. And so just as a note, as we've done in prior years, we'll present all the reports here in this meeting. We then would ask for the vote for just the district and the retirement protection plan audit district meeting.
Mhm.
When we switch over to the foundation, we'll ask for the vote for the foundation audit, which we would have already presented here, district meeting. So.
Yeah, I'm okay with that. You guys okay with taking the foundation and?
Sure.
Good, all right. Turn it over to Terry. Hey, Terry.
Hello. Craig sends his regards, but it's tax season. So
Yep.
already filed your taxes, good for you. But sadly, he's got many, many people who have not.
Yeah, you're busy
Okay,
till tomorrow, huh? Oh.
Yeah, after that, they'll just be late. And there's still some people who aren't going to make it. But so go on.
Go ahead, Terry.
Okay, so for the first one I'll do is the district. I'm not sure how in-depth you guys prefer it. Do you guys have a copy of the financial statements available? If you decide to, okay. So basically what happens is for the audit, it was fairly straightforward, no real difficulties. And you have the best opinion you can get for the district, which is no modifications. So there was one change to the financial statements this year. There's a new GASB coming in for 101, which relates to your compensated absences. So as a result, the district is now accruing a little bit more than they used to. Before it was just vacation time. Now it's vacation time and the related taxes, as well as some potential sick time that has been accrued. But there is at least more than a 50% chance that you'll pay some out within the next year or so. Didn't have a lot of impact on your financial statements, but it did slightly increase your liabilities.
Real quick, just clarify that point one more time. So if you have sick leave, unused sick leave, unused vacation, it gets paid out. Is that what he was saying? I missed.
So the vacation, we accrue 100% of what the accrued paid vacation is, because that would be paid out if an employee left employment. So 100% of that we accrue.
Is that a California law?
Uh-huh.
When does it disappear off the books? Only when they leave?
Yeah, so whatever they have not used, so they can accrue up to certain levels. And we accrue that amount on our balance sheet because that would be paid to the employee at the time that they left. Now, if they used all of their vacation and only had zero, then there wouldn't be anything available to them. Now, the other part is like sick leave. So we accrue a certain number of hours of sick leave for each employee, which they are entitled to use if they're actually sick. But they are not entitled to receiving that accrued amount if they leave employment. So it wasn't required previously for the sick leave to be accrued. Now with the new requirement, it does require some amount of that accrued sick leave to be accrued on our balance sheet.
Even though you don't have to pay it out still.
Only when they use it. So if they're using it, so like if I got sick tomorrow and I had time off, I would still get paid, but
We're required to keep that on the balance
it
sheet.
would come out of the sick leave component versus
We have a
regular.
discretionary category other than legitimate sick leave that gives an employee flexibility to use one or the other? In other words, like a discretion, let's assume you had 10 sick days on your books. Could you have 0 sick days on your book and 10 discretionary days?
I don't think so.
Now, they're categorized as either vacation.
They're very rigid categories.
Yeah, so,
Okay,
so if a person wants time off and it's not sick related, then they have to go into their vacation bucket.
okay, so there's no discretionary,
Yeah,
no discretionary category. It's either sick leave or vacation.
and employees have one floating holiday that they can use, whether it's for birthday or another purpose.
Okay, well, that's,
Or otherwise, it's lined up as vacation.
okay.
Holiday pay, we have fairly decent holiday schedule as well, so.
Okay.
Those are the bucket.
And the time off, and this is just clarification, just because we're going through it. The time off at the holidays, it's gonna be, office is gonna be closed. How is that categorized?
That's categorized as holiday pay.
The only request that I would make, similar to last year, is that there be a message be that if there is an emergency, which I don't, hopefully there won't be any, that they can contact you.
Correct. Yeah, we'll ensure that there's contact available as needed. Okay, back to you, Terry. Thank you.
Fair enough. So essentially for all those other categories for the compensated absences that you happen to mention, for the most part, they're considered not to be accrued, meaning you don't really bank those hours. They use them or lose them. They have no rights to them. So basically, even though you don't really pay out the sick time unless they're sick, because they changed the rules slightly, they wanted to know what would happen, how much is expected to be paid. Not really sure why they did it. They put out a whole justification, but basically it's the rules. So in your case, it didn't really impact, but they set up all these rules because a lot of entities have a lot more complicated.
Who's they?
That would be the GASB board,
Oh, I'm sorry?
the Governmental Accounting Standards Board. They are the ones.
The county. Okay, thank you.
Accounting.
Okay.
Yeah, essentially they make all the rules for what your financial statement should be. As I mentioned earlier, there was no modifications to your report. So just briefly looking at your financial statement, which if you're looking at the hard copy would be page 9, you'll see that there was a few changes. Basically you shifted, your cash investments went down about 17 million, but basically your long-term, you switched it over from considering it a short-term asset to a long-term asset. You invested them for long-term purposes. So overall, your total assets basically went up a little bit, and that obviously related to your hospital lease/sale. So everything else was pretty consistent. Your liabilities stayed pretty same. Your leases, you didn't really have a lot of activity. Your grants payable stayed roughly the same, and that's reflective of basically the grants that you approve. And then your equity actually went up by about $8 million, which is pretty much just a reflection of some of those accruals and that your overall activity for the year.
How are you accounting? Sorry, you mentioned it. How are you accounting for the sale of the hospital over time on the balance sheet?
The sale of the hospital over time currently is still listed as
It's
a
not
lease.
too early.
Yeah, that's what I thought.
Doesn't exist yet.
Correct.
A piece of paper.
Okay. So you're still listing it as an asset that we own, not as a note payable or anything like that?
You still technically, it's essentially falls into the lease category.
Okay.
Because you haven't quite, technically it doesn't start until after your other payment.
Right.
That's right. That's what I thought. I just wanna-
So the real impact on your financial statements would be basically, there used to be a note saying like if the hospital it was canceled, you'd have to pay for it. Basically now it just says, you don't really expect that to happen because they opted to buy it over the next, 30
So-
years or whatever it is.
What's the current value of the hospital on our balance sheet? Your account.
You didn't really have it. It would be buried in your lease, just like you had before.
So where's that number?
That would be in your lease.
And correct me if I'm wrong, Terry, but since the lease is a capital lease for tenant, they record it on their books, but we don't record it on our books because it was all prepaid lease back in 1997. So we don't carry an asset or liability on our books.
We don't.
Mostly true.
I didn't think so. I didn't see it.
But
That's why I
that
was
changed
asking.
with GASB 87. There is a small lease receivable that reflects on there. So yes, the actual
Yeah.
value of the building has been
That-
off your books for quite a while, and under 87, it shouldn't be on there. Once 87 came in a few years ago, you basically ended up one of the leases you have. Basically, you're leasing a few buildings, a few office spaces to them as well. As a result of that sale or the eventual sale, those were not really listed as a lease receivable because they weren't necessarily the likelihood of how long they were going to last was in question. So the net result is you don't have much on your books. You have a small lease receivable, which the amount escapes me at the moment, but
It's okay.
It wasn't-
Which are related to the leases at the medical plaza.
But the medical plaza is not listed on here as an asset either, is it?
It is.
Is it? Okay. So
yeah,
my question was around how will the public view of our balance sheet change when this sale goes through? What
when
I
the
imagine-
sale goes through,
Yep.
since you don't really have it on your books, you're transferring title. So
There's
essentially,
gonna be a
what happens is-
significant asset, right? I mean, they're gonna be paying us 30 million a year for the next X number of years. Is that a notes payable that's gonna be on there? How will you account for that on the balance sheet?
that will probably be. That's a good question.
Want
It will
that,
probably be recorded.
Terry, want that, because there'll be lease payments for those 30 years.
Not
So
lease
will that fall through the lease payable or
Payable.
release receivable calculation that we do?
Technically, under 87, if you're selling it, it doesn't qualify. It doesn't qualify
Okay.
under 87. So essentially, what will happen is it probably you won't see. You'll probably not end up having any receivables on the books. You'll record the payments as they come through because you don't have the asset on the books. So in order to record the sale, the most common way, if it was still on your books, you would dispose of the asset and you'd switch it over to some kind of receivable.
That's why I was asking the question, because I didn't see it on the books, and now we're gonna be getting payments. I just was curious how.
They're just incoming lease payments. And that was an element that I'd forgotten, Terry, that if there's the sale of the property as a component of that lease purchase agreement, then we don't have to record it
Okay.
on the balance sheet. It's only when the lease payments come in, correct?
Yeah, you'll send essentially you're on the cash basis.
Yeah.
All right, okay.
Um,
That's good. That's all I wanted to know. Thank you for
so they won't
clarifying.
really see it on the balance sheet. It'll be in the notes, which most people who use your financial statements probably won't read.
Right, I just curious.
And
Okay.
just from my understanding that the reason why this is being treated this way is because we're leasing it in the beginning, but it'll trigger the option to buy at the end. So we're not really selling it right now. Is that?
Well, I think, go ahead, Terry.
Technically, what the rules say is if you're leasing something and they have an option to buy it, or in this case, they'd have to actually exercise an option not to buy it. You treat it, it doesn't count as a lease. So basically, under the old rules before 87, you guys basically you treated the old lease rules basically as a sale in the first place. Because you took the books, you took your building off the books and you just recorded the income. So essentially, it moved off your books years ago. under 87, because it was basically, they always intended they were supposed to, basically, if you're not going to, if it's a capital, meaning they can get it at the end of the lease, you should pretty much not record any activity other than basically showing what you got paid every year. You may need information in your notes, but you don't show that on the books. So yeah, essentially until they decide not to buy it, which hopefully never happens, you wouldn't show it on your balance sheet. If for some reason the sale fell through, that would trigger it basically showing back up on your financial statements.
Isn't the sale price
other
$1?
issues.
No.
Is there a fair market value for this? Or is it $1?
No, it's built in, but the final $100 million payment is the payment
Is
for
the
the
payment?
transfer of the asset.
Thank you for clarifying that. I have no further questions about it. Anybody else have further questions? Okay. Let's go on to the foundation. Go ahead.
Wait a minute, he's not done with the.
Are you finished with the hot?
I am, unless you have questions.
Okay, good.
Okay, so for the foundation, basically you also have an unmodified opinion, meaning we didn't really find any thing that was outside of the accounting rules and or that you'd refuse to fix. In this case, we didn't find anything that was outside the accounting rules, so it didn't get that far. And so basically what happens with the foundation here is it's pretty similar to the last year. Your assets only went up the foundation. Your assets only went up probably about $400,000 from the year. It's 6 million versus 5.6, which kind of makes sense because you basically operate this as you're basically a grant giving entity, so you don't really put in a lot of assets unless you're intending to spend them. Your investments, which have some charitable remainder trust, had some change. They went up a little bit, which is where most of your increase of your assets came in, and your liabilities stayed pretty much the same. So not a lot of swing or work. Basically any kind of real differences from the prior year, which makes sense because basically when you guys came up with your budget, this is more or less where you guys wanted to be at. Is there anything in particular you guys want to talk about the foundation?
The long-term liabilities, increase because
Those are grants payable. So essentially
grants
what happened.
payable. Okay, that's fine.
Yeah.
And so we break that down into the current component of grants payable would be payable within the next
Year, yeah.
Anything beyond that, so like, in the instances where we've done like 2-year grants, then that second year.
These are the Zendel carryovers.
Right.
It's primarily the environmental health RFP that we did that was for a 2-year period. That's what those are.
Yeah.
Related to.
Yeah. It's based upon when you expected to pay them. It's just a rough estimate, but usually speaking, grantees don't really try and accelerate their expenditures without talking to you first. So
Now, when I log the difference in the year, it has to do with the grant payment schedule, so which is established when we award the grant.
so is there any other question? Because most of your net assets are basically primarily no restrictions, which makes sense. And your donor restrictions relates to those. I believe they relate to their charitable remainder trusts, but I'm not sure off the top of my head. I'd actually have to go back to the work papers to see what the. Oh, I'm sorry. That's board designated. So that's set up. You guys set up a list of what you wanted to use money for. So that $965,000 is.
That relates to the carryover that we've done from prior years, so we have that, but it's that's not designated. So once you designate, the board designates and we award something specifically, then it reduces from that board designated category under the restrictions, regular restrictions.
Yeah, most of that's pretty much your grants payable, but, and then obviously there's some small amounts of donor restrictions, which is what should probably be related to some charitable remainder trusts, and I think there was some other minor restriction from a donation from years ago.
Yeah, it's actually from the behavioral health, from the district to the foundation was the grant. That was that other portion of that.
Okay. Are there any questions on the foundation? Because there wasn't a lot of change between the years, so it's not a lot to highlight on my end.
Thanks, Terry. I think we're good to move on to the RPP.
Okay, so much like the other two, you have an unmodified opinion, which is the highest you can get. And then for the activity, this is basically a closed plan. So basically it's very slowly drawing down. So overall, your assets went up slightly, pretty much related to your investment gains.
Terry, can you please, excuse me, can you tell us what page you're on? That would be just a little bit helpful.
Oh, sure. Page 4 of the RPP one. That's your statement of fiduciary net position.
Right now, you're there. Page 4 of that. There you go.
Okay,
Right there.
thank you.
Okay, so as you can see, your investments are about 4.6 million. That's basically just a result of your gains of whatever your investments are. Basically, the mutual funds, stock market had a pretty good year last year, and basically, that's where you're at the year end. You don't really have a lot of liabilities, just some minor trustee fees, and basically all this is reserved for paying off your plan as well, basically as people either age into the plan or as they retire and age out. So there is not a lot of you wanted to look on page 5, your very next page. This is where you actually see your investment income, your interest and dividends, your net gain loss from the sale of investments. So that basically explains your overall increase. So you had sales of various investments for about 500,000, and then that's offset by what looks to be actually a loss in your unrealized gain for about $133,000. And then you have distributions of benefits, which are dropping off from 510 to 249. That relates to the fact that the plan is closed, and as the number of participants decrease, so too do your payments. Is there anything you guys wanted to ask about this?
Yeah, the numbers make sense. I do have a general question though to you.
Go ahead, Chris.
Is this plan something that we can move out of the district altogether since we're not running the hospital anymore? Is this something that we can find a third party to manage and we can just clean it off our books completely so we don't have to, I want to make sure these employees get taken care of, but seeing that we're not running the hospital's been sold, I know these people may still work there. I'm not sure the full status of everybody on that, but it's not really in our jurisdiction necessarily long-term.
And if we think back to, I believe it was last month's F&A committee.
Yeah.
We did present that
Yeah.
we are looking at options to do that because, it takes some administrative time, dealing with this. Can we go to the next page? I believe it is, Andrea, or no, go to the bottom of the other page that we were on.
First one, yeah.
Yeah.
That's right. It's in the district.
Oh, okay. So maybe we can hop back over to the district for a minute and go to the balance.
What was which part were you talking about in there?
Of the PDF doc, if you're in the whole.
Yeah.
I'm in the whole package.
In the whole packet.
What you're saying, hold on.
So while she's looking for that, so I think
Is it here?
Yeah. Page 9 of the district audit. I was looking at the whole packet, I'm sorry.
Well, yeah, this is the whole package. So
Okay.
I have 133 for the total,
Oh, I see what you're saying. Hold on. Page,
37 and 133.
Right there.
oh, that's it.
Oh, yes, right there, total pension asset.
Yeah, there we go.
You scroll, it's right at the top of the screen, if you can go up towards the top of
Go
the
up a
screen.
little
There
bit.
you go.
Yeah, right. Okay, so the net pension asset, $2 million there. That's essentially saying that we have $2 million more in the investment account than what we would need to pay out to those participants.
Correct.
So that stays there forever until we finally close out the plan. So what we had suggested is maybe looking at opportunity of outsourcing where you're going, I think, Director Logston, that we could set this up where we could, if we had the plan changed, because the reason we set up the plan was that the district didn't have the resources to pay those employees when they transferred to employment with the hospital. Now we do have the resources, so if we were able to change that plan, that would allow paying out the participant funds
Correct.
to, because we've got about 50 of the employees that are no longer there. They're entitled to those monies now, but they haven't requested that they be distributed to them. So if we were to go to the IRS, change the plan, and we could then pay out those monies.
Yep.
And then those that are still employed, we can then go to an outside, like an insurance company, something like that. We do have to offer annuities, or we can do transfers to like their own personal, IRA type plans and things like that. So that's something that we are working on so that we can bring back to the committee and ultimately the board to make that
I
happen.
think that makes a lot of sense to do that, it just,
We're gonna be dealing with a whole lot bigger,
correct. I just need to clear that off, not have it as a liability,
right?
not have it as a time thing to even think about and just clear the books.
Plus, it's gonna save us about 16,000 a year between the audit and the actuarial valuation.
And it's, I mean, we've actually made money owning it over this past year. So it's,
Right.
I mean, we spent 17 and we made 400,000. But I think just the idea of it not, since we're not directly involved anymore, just
And
one
we
less.
can put those monies to better use.
Yeah.
In the different-
Right, and it's just one less thing that we have to distract us from our attention. So I think if that's something we accomplish this year, that would be big too.
Yeah.
So,
We'll get it done.
thanks. Yeah.
Yeah, I definitely like that idea. Hopefully we can wrap it up as quickly as this year, but I think
Yeah.
it might take a little bit longer.
Might take a little time because there's
This year,
legalities.
a year to do it.
The only thing is, just for total accountability here, I would like you to change the way you list this. Instead of putting an RPP, to spell it out what it is instead of an acronym. And
On the agenda.
the agenda. And also you might even do it as a separate item, separate from our audit I think that's the way you've done it in the past, but just for a little bit more, transparency.
Okay. Thank you.
Per day, do you receive all the timeline?
Yeah.
Okay, perfect. How does home inspection tomorrow 9 AM work for you? Is that okay?
fine.
Okay, fantastic. So we should be.
Discussion. I think we have two actions. I would just say we lump it all together. Any other board questions regarding the three audit reports we discussed? Okay. I'd request a motion to approve all three items together.
So moved.
Second,
We're not approving the foundation on this one.
Correct.
This
is-
Oh, sorry, the two, sorry, just two. The two.
Any more questions or communication with Mr. Robertson?
I think Terry's good. I just need to open up public comment real quick.
Yes, and we also need a roll call as well.
Yep, we'll do that.
Okay. I don't believe there's any public
All right.
comments.
We'll do a roll call.
Yeah, we're good. So, Chair Loxton,
Yes.
Director Delara,
Yes.
and Director Shore.
And Director Shore.
Director Shore, excuse me.
Yes.
Yes. All right, Terry, thank you.
All right, thanks. Have a good day.
Thank you.
Appreciate it. Happy tax filing.
All right, Eric, financial reports, we kind of hit the highlights for this month.
Just brief notes for it since we've got a lot to work through. Let's see. Starting on page 106, the packet. My numbers are correct here. Yes. So really, we're through September, so the third month in the year, so it's still a little early on some of these items. So main thing, we're up in our income, which has been kind of a regular thing having to do with the interest and market fluctuations. A little bit higher property tax revenue, but at this point, we don't budget a whole lot for the first several months because it takes a couple months before we start getting the New Year's tax receivables. Usually what we're getting the first couple of months are the remainder of the prior year's expected tax revenues. Other expenses are lower, but we're still early in the year and a lot of these are budgeted equally. So we're going to see a little bit of those ups and downs. There wasn't anything specific that was of concern, although the grants indicate 261,000 over budget. We do that equally. And so we've just luckily been able to award several grants so far this year, which is good. You know, we don't have the applications, we can't award, we can't control the flow of the applications, but in this case, it just means we're on a good trajectory for awarding those grants this year. I don't have a whole lot else throughout there because a lot of they're all very normal variations that we have here to date, but I can answer any questions that we may have.
The retirement protection plan, that's just code word for the escrowed money to pay all people.
Yeah. Well,
Yeah, it's just a different way of,
discussion.
just a different way of,
Yes.
different
It's
terminology.
reflected on as the net asset or net pension asset on our balance sheet.
Do we have to accept this as a group or just an action item, Andrea?
The whole thing will be.
The whole thing's in.
All the financial reports, we can do all as one action item.
It's the time to do so.
Not yet, unless you have any other questions or.
Other matters is different though.
No, but there's a list on the agenda of the different financial reports.
Right,
We
right,
can do all of those.
right. That's what I was suggesting.
Right, but I don't think, if you've gone through them all, then yeah, you can do it. I just didn't know if we were through them all.
Yeah, I didn't have anything to specifically note because they're all within normal expectations. But it can answer any questions.
That was the basis of my recommendation.
exactly.
Move to que-
Yeah, if there's no questions, then.
Right.
Good guy. I didn't see anything.
Can you just second?
Director Laura, did you have
They
anything?
do not have
to
any
review?
questions this time. Thank you.
Oh. Nothing?
That's
That's what I was surprised by.
Can we record that in the minutes?
I was surprised.
On the credit card to the CEO discretionary fund, we guys skated through. Nice job.
Nice.
Sounds good.
The only thing that.
Yeah,
now that you
I
remind
know,
me-
I was I just,
There is.
I didn't wanna
a CEO
backtrack.
Discretionary report, right?
It's there.
It's-
Yeah,
It's there.
When,
It's in there.
when you just said that, I go, I remember seeing it and now I'm looking at it.
It's in there.
calling out the highlights.
It's there.
129.
129? Will you put out a thing I can't?
Yes, it's right there.
Okay. Okay, thank you. I'm just used to seeing it longer. Yes.
Cutting back.
Okay, thank you.
You're welcome.
You can put it right
That's
there.
why we're doing a lot more through like the sponsorship component.
All right, that sounds good. I'll ask for a motion to approve the financial reports. If there's no further questions from the board,
So move.
Second,
open up for public comment or we take a roll call.
no problem.
Is that the Wangs in Cathedral City or is there still a Wangs downtown? What?
Neither.
Neither?
Oh, there's a Wangs in Cathedral.
This is Wangs in Cathedral City. No.
All right, roll call. Sorry.
Chair Logston,
Yes.
Director Delara,
Yes.
Director Shore.
Yes.
Thank you. And on to other matters, the mute broadcasting system extension of our podcast consulting services.
What we're looking to do here, we currently have an agreement with Mutual Broadcasting that was good up through September 30th. They've been assisting with processing all the podcasts that Will's been doing, which was brought up and started after we had last year's Healthy Desert, Healthy You. So what we're just looking to do at this point, for the initial 6 months we've gotten through, we're looking to extend this up through the remainder of the fiscal year. This expense is budgeted already. So it's been consistent. Fees are going to be the same for this. We just want to continue to produce those episodes because we've been having success with them. And in the report itself, Will had provided a handful of different numbers as far as the number of episodes we produced and some of the topics that they've had. Everything we're hearing is just good feedback on the quality and quantity of what we're producing, and just want to continue for that. So we recommend approval, and the draft addendum here is included for your review.
And if I may, we've been mostly doing audio podcasts, but we're looking to do potentially some videos as well. So those will be $150 versus $125.
How, is there a schedule of topics for going forward?
We don't have one that we published, but
I mean, internally.
I think Will is working on, different topics, and some of it's kind of based on, the individuals that he invites to do the podcast with. And then he generates topics to do those.
Okay, I just think that's a fabulous platform, as I've said over the years, to highlight our grantees. And promote them as if you will, as a service that produces service. So.
Right.
Just a thought.
Okay.
Hello.
Hello. Hi, we're just finishing up our finance committee.
Yep. Come on in.
Okay.
You guys ready to take action? You have a comment?
My one question is, I think this is a good service for creating greater awareness of the work that we're doing. But what do you, when it mentioned on here that it has been successful, how do you evaluate success for this?
I think probably what would be good is Will to be able to show, what the metrics are as far as views, and that goes.
I want there to be greater awareness throughout, and I'm just wondering, what is he using? So yes, I think I will be very interested in seeing where this is being viewed, how it's being used, and so forth.
Let's do a little feedback on that.
Yeah, we can do something like that.
Thank you.
Yep.
No further questions? Make a motion to approve the extension of this consulting agreement.
So moved.
Second.
As an aside, it's not that it's relevant to the discussion, but all the years that we've heard promotions on the radio of a contest, the whole purpose of those, call and be the 11th caller, if you will, and win a whatever. Those are all examples of how the radio stations measure their reach and their responses. So just as a technical point of information.
Thank you.
All right, any public comment on this?
No public comment.
All right, roll call.
So Chair Logston.
Yes.
Director Delara,
Yes.
Director Shore.
Yes.
Any further committee member comments? Seeing none, I'll move to adjournment at